Hey everybody, let's get back into housing and let's talk about the housing market, home prices, and what the National Association of Realtors has come out and said about 2023 and what their price expectations are. Well, first, let's go ahead and rewind a little bit. National Association of Realtors in late 2022 had predicted home prices to rise in 2023. Now, at that time, we reported on it. We said, well, of course they're going to say that because that's their business. They don't want to project any doubts or any negative forecasts because that could make people it could scare people and make people not want to buy a home because if they think prices are going to fall. Well, apparently the backlash and the criticism, was so big because prices have come down, not by a lot, but anywhere from 1 to 3% in most parts of the country. Not every part of the country, but most parts of the country. Some more extreme price declines if you look at Boise, Idaho. If you look at Austin, Texas, if you look at the Bay Area, but overall, a few percentage points down, which means that the National Association of Realtors was wrong. So they have this balancing act where they don't want to scare people and stop people from buying a home, by putting out a huge price decline forecast, but people can look back and just see their forecast now, just 8 months ago, 9 months ago, and see how wrong they were. And then people are saying, okay, their business is real estate. Shouldn't they know? Why are real estate professionals wrong in getting these things incorrect when people on YouTube are actually more accurate than the realtors and the National Association of Realtors? It doesn't make any sense. So people started questioning and criticizing and wondering what's going on. So they went ahead and revised their forecast. Now I'll let you decide if you think their revisions are realistic. Now I've always said here that I think home prices would not crash, and some couple people have said no, I predicted home prices to go up. No, I said the cost of owning a home is going to go up, and it has because you look at mortgage rates. Now that's not true though for cash buyers, of course, if you're a cash buyer, but less than I believe it's 2 in 10, I don't have the numbers in front of me, but right around there are cash buyers. So most people, a large percentage of people, have to finance their home, and yes, the price or the cost, in this case the payment, has went up for them because of the higher mortgage rates. But I did say prices would come down. I said they wouldn't crash, but they would come down. But National Association of Realtors back at that time did not. So now here's the latest. Realtor.com, NAR connected here, has re-examined its prior housing predictions and now expects a dip in home prices and rents. Home costs are still going to be higher for buyers in 2023 because home price declines are very mild and not usual. Talking about higher mortgage rates. The real estate company now expects average home list prices to drop 0.6% from last year. That's tiny, less than 1%. We're talking 0.6%, compared to its prior prediction of a 5.4% year-over-year increase. So they did a pretty bold prediction there, 5.4% increase, and we see about between a 1 and 3% decrease, bigger in some areas. And they said, quote, we made a bold call that home prices wouldn't go down in 2023, and with the latest data, we're revising that projection, unquote. Now, I am of the belief that the realtors here, the National Association, NAR, I am under the belief that in their hearts, they believe that prices are going to come down a lot more than 0.6%. But again, they don't want to push the panic button, so to speak. All right, so we're going to talk about that and what's going to happen on the other side, what I think is going to happen, my prediction, so to speak, after this word from our sponsor. I'll see you right on the other side here. It's about 1 minute here. Reign in wealth like King Charles with a gold IRA from Noble Gold Investments. Just as King Charles's magnificent gold crown symbolizes wealth and power, a gold IRA can fortify your own financial kingdom. Imagine the confidence that comes from a retirement backed by a tangible, proven asset, gold. An asset that's not at the mercy of unpredictable market swings. A gold crown may not be included, but isn't a future free of financial stress a worthy throne? Like royalty, enjoy the luxury of choice. Gold, silver, platinum, or palladium, the realm is yours to command. Fend off concerns about economic downturns and let your wealth thrive with the timeless security of precious metals. This month, the first solid quarter ounce
gold standard bullion coin ever issued with King Charles III's image can be yours with your own qualifying gold IRA or 401k rollover of $50,000 or higher. You can't go wrong with Noble Gold Investments. Call Noble Gold Investments at 877-646-5347 to get started, or visit bullboomgold.com. That is bullboomgold.com. Link down in the description of this video.
Okay, so here's what I think is going to happen. I see price declines between 5 and 7%. Now, it doesn't mean in all areas. You might see some places 10%, like we saw in the Bay Area last year, and some places 1%. And you might see a few places, a few pockets where prices actually don't drop at all. But overall, when you look at the average, or what's called the median, and they gather all this data nationwide, I think it's going to be between those percentages, actually between 4 and 7%. Let's be a little more bold. Now, things can change. The Fed could change direction, pivot, cut rates, emergency rate cuts because some surprise situation popped up that nobody expected. Think health crisis 2.0. Think some other global situation arises, right? So there's so many things that could jump out of the dark here, and emergency rate cuts could be implemented. Now, on that note, let's talk about rates. People were out there, many people, many well-known economists, financial news, influencers, saying the Fed's only going to raise rates. They want to protect the dollar. They're not going to pause. They're just going to raise rates. And I always said, well, why won't they just raise rates faster then? If raising rates was the solution, why go 0.25%? Why go a quarter of a percentage? Why not just go from where we were up to 5%, the next up to 7%, the next 9, 10, 11, 12%? Why not raise them more rapidly if rising rates were the solution, or higher rates were the solution? Of course, the question answers the other question, that they knew that this was not the solution, and they knew that higher rates at a faster pace would be even more disastrous than the inflation that they're supposed to try to fight, right? It's just pretty simple when you look at it. It's just common sense, connecting the dots. But a lot of people couldn't see it. So here we had this rate pause. They didn't raise the rates the last meeting. Some people say it's not a pause. They skipped it, meaning that they're going to be continuing rate hikes in the future. We'll have to see. I, again, know that they're not going to keep on raising rates at some point. I shouldn't say I know, because nobody knows, right? Nobody knows for sure. Nobody's 100%. But I have a very strong indicator that they're going to be either raising rates very slightly and then finding an excuse, and it might be a good excuse because who knows what could happen. I've got a few ideas of what I think is going to happen. I think you do too. But rate cuts, I think emergency rate cuts are in the near future. Now, something else that I've always tried to underpin this information with is that it's difficult or even impossible to predict a manipulated market, right? When you have a money printer that they can create trillions of dollars out of thin air at the click of a mouse, they can prop up any market, they can push down any market through shorting via the traders that are connected to the money printers, right? It's very difficult to predict, what the people-driven economy is going to do. When I say people-driven, I'm not talking about the consumers, you and me. I'm talking about the ones that control here, the ones that decide the rates, the ones that decide how much money to print. We've also had, these people decide to no longer have a debt ceiling until 2024. Very interesting timing. They're the end of 2024, so very interesting timing there. We know what happens at the end of 2024, so I think that's why they wanted to eliminate the debt ceiling, not just raise it by a certain amount, but completely get rid of it. So now the spending is unleashed, and when you find the answer to why they needed to do that, then you'll know what's happening. All right, so housing, rents, it's going to be interesting, right? Because we have a few other forces at play here. We have, and I've talked about this, but we've had a lot of people out there saying there's going to be massive crash because so many people are going to get wiped out from the health crisis that the population is going to decline, and therefore, where are the home buyers? Well, we still have we still have a lot of demand out there, even with the higher rates, right? So I'll just leave it at that. Please let me know what you think down in comments. Where are we headed? Rents, home prices, rates. This whole thing is absolute mess. But hey, we're going to keep an eye on it. We're going to do our best to figure it out, navigate it, figure out where to put our money. I still say hard assets, have some money out of the system in case we do see deflation, have it in a safe place. Silver, though, to hedge yourself against more massive money printing and rising cost of living. And if silver ever gets unleashed from the manipulation that's pressing it down, the derivative market, you're going to see price explosions. So continue to leverage yourself is what I'm doing, and you might want to think about doing that too, in my opinion. Everybody, thanks for being here. Bye for now. Keep stacking. Peace.